1/3 of the entire S&P 500 is reporting earnings this week. So in today's video, we're going to be taking a look at the S&P 500, the NASDAQ 100, the Russell 2000, the dollar, and then the bonds. All right, so without further ado, let's get started with the video. Not going to lie, this is a very jam-packed week. So first and foremost, we can clearly see we got Google, Microsoft, Facebook, and then the biggest, we got McDonald's Thursday before the market opens. So this is going to be a very, very big week. We have a continued more banks and economically sensitive stocks reporting earnings this week. We have Verizon, GM, 3M, GE, Spotify, Visa, Snap, Google, Microsoft, AT&T, Boeing, Coca-Cola, Chipotle. We have a lot of very important earnings this week. So it's going to be very, very fun to see how everything plays out. Of course, also we have ExxonMobil Friday as well, and Ford again on Thursday. So things are going to be pretty interesting. Very, very interesting. And then Raytheon, we didn't even mention Raytheon's all the way at the bottom over here. We have Hilton, more economically sensitive stocks. We have eBay as well. We have Mattel. Yeah, crazy stuff. All right, so there's that for our earnings. Obviously, we have to recognize and remember that prior to earnings, there is sometimes an earnings run-up, which means that sometimes prior to the earnings date, the stock price ends up rising in anticipation of the earnings. And then once the earnings comes out, people sell. Okay, so keep that in mind. Also, another thing to keep in mind is that the option premium for these trades are going to be very, very overinflated. And if you want to play tech stock earnings, for example, on Microsoft or Google, etc., right? The easiest thing to do, obviously it's not easy, but you can be an option seller. That makes it so that you can capture some of the implied volatility, or you can simply just buy stocks, or you can play the NASDAQ. If you really think that Microsoft and Google are going to help push the market up in a certain way, you can trade the QQQ options as a bit of a way to get some of the action instead of just playing Microsoft and Google directly. All right, there's that with the earnings. This week is going to be very, very fun. All right, next I'm going to take a look at the charts. All right, so let's get started with that. All right, so before we start, something very interesting that I want to take a look at with everyone is the SPX returns after the monthly options expiry date. So basically every month there's a date when the options all expire. So generally that tends to be very bearish afterward. So this chart is basically showing day 4 is the monthly options expiration. So this is just an arbitrary chart, okay? And mind you, we're going to look at the S&P 500 chart after this. I just want to simply show you guys that for April, May, June, July, you can see April, May, June, July here, right? You can see that each line is a month. So on the 4th, right? The 4th date here, the S&P 500 price ends up falling lower for the past few months, okay? We don't know how July is going to do. We just started July. But yeah, so it's a trend generally that after OPEC's, the price ends up falling lower. So now we're going to have to see how often this ends up playing out, okay? Okay, so here's our daily chart for the S&P 500. And each red line is the options expiration date for OPEC's, right? When the options expire per month. So we can see that the first one recently was June 16th. The market ended up falling much, much lower afterward, right? In May, the market ended up falling much, much lower afterward as well. Cool. Sorry, I'm just trying to show you that the market ended up falling lower. Over here, obviously in April, it ended up falling lower as well. In March, the market ended up bouncing, okay? Then in February, obviously the market, you can see that it fell lower, much, much lower, right? But then in January, the market rose. So this is 6 total times so far this year, right? 6 months, obviously. And 2 of the times, the market ended up rising. So obviously, it's not a 100% clear cut reason to be bearish, right? But 4 out of the 6 months so far this year, every time options expired, it's led to bearish movements, and it's led to downside in the market, basically. So options just expired here for July. Options just expired on Friday the 21st. So now, there's a big question mark. Are we going to end up falling lower, or are we going to continue rising? So now what we need to do is objectively think and put all the pieces together, try to understand what is going to end up happening with the market. For us to judge this, right, there's a few variables that we need to take a look at. Number one is all of the earnings that are going to be reporting this week. We have to realize that generally, prior to large tech stocks earnings, there is an earnings run up. Okay, we saw that with Tesla, we saw that with Apple, we saw that with all of these large tech stocks over the past few weeks. When there's any sort, we saw that with the banks, we saw that with the entire IWM, right? They all jumped up, and then once earnings was reported, it fell, right? So that could be a bullish case for the upcoming week, right? The other thing that we need to look at is just the overall chart pattern of how things look. We need to look at the dollar, and then we need to look at the bonds. All right, so we already covered basically the fact that like there could be a bullish move upwards for earnings week, right? Now what we need to do is we need to take a look at the dollar and the bonds. Okay, so let's go ahead and do that together. All right, so number one, this is a chart of the dollar. All right, and the dollar is very, very relevant to what we're doing, because if the dollar is rising, then that means that the market should be falling. It has an inverse relationship to the market. So as the dollar is starting to show strength, that is not good for the market. It's bearish, okay? So what we saw is the dollar finally closed above some important levels here. It's starting to rise. The next most important level, very, very simply, guys, is this high here from Wednesday at 105, 100.51, right? And as we continue rising here, clearly, as the dollar rises, it's not bullish for the market. And the other thing, I generally, don't look at this on like day trading, right? But the MACD indicator is very, very important to look at in terms of looking at the overall momentum. And this yellow line is the slow MACD line. The blue line is obviously the faster acting MACD line. So the MACD is doing exactly what it needs to do to create an upside move or continued upside potential. This blue line needs to continue rising and become very, very overbought. And then eventually this yellow, slower MACD line is going to average out slowly and then begin to creep up. That is the only way. This blue line needs to basically continue showing a lot of momentum to the upside for this yellow line to average out and start to curl upwards. Okay, so the MACD is doing what it needs to do for a bullish move. And if the dollar is bullish, and specifically if it crosses back above this level, then the market should continue to fall lower. All right, so that is that for the dollar. Clearly showing some strength. We got 2 solid closes above a major level of resistance. Let's see basically what the next steps are. But so far, the dollar looks pretty bullish. Okay, next, we need to take a look at the bonds. All right, so the bonds are relevant because it has a more correlated relationship to the market. We were long on the market while the bonds were very overextended to the downside. And the bonds basically have, a correlated relationship to the market. If the bonds are going to do well, then the stock market should also be doing well. And down here in early July, when the bonds were very, very overextended to the downside, I was showing how we should be bullish on the market. And we ended up bouncing very dramatically, okay? So the bonds correlation works at extremes. And what we saw is a huge move to the downside on the bonds, which was a lack of strength. So this lack of strength is clearly not good for the market, right? So the only way, in my opinion, for us to become very bullish again on the bonds and become bullish on the stock market is if we cross above this level of resistance here on the bonds at 127.23. So if we get a close back above this level where we clearly rejected with a very big red candle, which is clearly not good, all right? We're gonna need it to cross above this level. So far, the dollar looks bullish, the bonds look bearish. And this is not that's not extremely bullish for the entire stock market, okay? So there's that for the bonds, there's that for the dollar. Now let's go ahead and have some fun. Take a look at the S&P 500, the NASDAQ, and then the Russell. S&P 500 daily chart. Let's get into it. All right. So clearly this does not look very, very bullish. If it breaks below this low here, 451.50, then I don't think, you know, this is not like the upside momentum is done, in my opinion. Like it needs to hold this level, the lows of this candle, it needs to hold. And if it doesn't, then the upside momentum is done, in my opinion. So this is clearly not, this is generally not a bullish setup. If this setup comes on a 1 minute chart, you're hoping, I am hoping for it to come up a little bit higher, paint a nice green candle, and then short. That's generally what I would do. Short with stop loss over there. That's what I would do on a 1 minute chart. So I would be praying that it comes a bit higher so we could average in. That's basically what it is. This is not a bullish setup, okay, on the SPY. Very, very simply. On the NASDAQ, clearly this is, whoa, guys, this is super bullish, right? No, I'm just kidding. This is also not bullish, right? We can clearly see on the NASDAQ, we cross below on the MACD. So when we cross below, the momentum to the downside continues for at least 1 to 2 days. So this was the first day that we crossed below. Heading into Monday should also be a bit negative, right? But I'm hoping that we get a bit of a bounce. I'm expecting it to hopefully get a bit of a bounce so that we could lean short a bit as we get higher on here, right? But again, you know, we have to fill this gap here from Wednesday's high at 374.19, and then below that, you know, I'm expecting it to fill the gap and then hold that level as support. And then I would be really, really, really shocked if it just completely kaputs and falls lower. I'm expecting it to get a bit of a bounce. But overall, you know, I think the SPY and the NASDAQ, it would be in the best interest of everyone if there was a little bounce first and then a re-short. And yeah, there's my thoughts for the SPY and the NASDAQ. IWM, clearly very similar looking chart to the S&P 500. Once again, they're all just looking, this is the SPY. I cannot stress how often that setup leads to more downside. Probably close to like 90% of the time. On a 1 minute chart, that setup leads to more downside. So I would be very, very shocked to see the SPY make new highs. I'd be shocked to see the IWM make new highs. And overall, everything is very close to support. You don't want to be shorting at these levels of support. The IWM is very, very close to support here at 193.70. The SPY is very close to this support here at 451, 450. And the NASDAQ is also clearly very close to support here at this gap. Now, you don't want to just aggressively short into a move down, right? But you have to realize that the dollar is showing strength. The bonds are... This is going to be a really, really fun week because the earnings, like earnings in and of themselves, could be a catalyst for a move to the upside. Because prior to earnings, once again, there's an earnings run up. That could give some time for the dollar to basically consolidate a bit. And if the dollar consolidates, right, it gives like some room for, you know, consolidation. If the dollar falls, then that's bullish for the stock market, which would give room for the SPY to bounce up to a higher price. As the dollar comes back and the SPY rises up, right? So as the dollar falls and then the SPY bounces off of support, that would be an amazing opportunity to add shorts because the SPY would have bounced to a level of resistance and then the dollar would have fallen to a closer level of support. So then this would be a much better place for the dollar to bounce off of, and that would lead to downside in the S&P. All right, so I hope this makes sense. This week is going to be really, really fun. And I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. I hope you guys have an amazing Sunday. Love you guys. Take care. I'll see you guys bright and early tomorrow morning. Thank you.